David Williams, investor and forecaster at Page Traders, here with us this morning. David, welcome, and Happy New Year to you. Before we talk levels and some of the selling we've seen to begin the year, where it fits into the parameters you're watching, any headlines behind the move lower we saw yesterday and into the cash open this morning?
Yeah, good morning, Ben. Great to be here, and Happy New Year to you and all your listeners and your dog, which is beautiful.
Thank you, David.
Yeah, you got it. Listen, the fundamentals of crude continue to be centered around China, COVID-19, a gloomy economic outlook, the continuing strength of the U.S. dollar. There really are no new ingredients in this. It's just the same basic fundamental conditions that we've seen throughout last year, with each one of those taking center stage for a period of time, and then the next one taking center stage, and so on. We believe right now, Ben, that those fundamentals and the current technicals for crude indicate somewhat dramatically lower prices still coming. So last time when we were on your program on December 14th, I noted that our forecast was that we felt that crude, if it could close at least a day above 76, it would rally to 81. We recently got that rally to 81 on December 27th, and then again yesterday on January 3rd. What makes us suspicious about crude is that it wasn't able to do more than the target. And for us, that puts the market in a weaker position as far as our work is concerned.
I like that. We always talk about the inability to go higher is as significant as the market's ability to go lower in terms of, and especially when you have some of the fundamentals, as you mentioned, again, China. I mean, you can understand, it seems like there was a lot of optimism as we heard about some of these COVID policies, zero tolerance being lifted, but it does seem like that sort of sense of realism has kind of settled in as we are kind of accepting the fact that this is going to take a little bit longer than we thought.
Yeah, it's probably going to take a lot longer than we thought. Certainly, from an optimistic viewpoint, it might happen sooner rather than later. From this point forward, from our forecasting strategies, we believe that crude is probably going to get back below the it's below it now, but just marginally below $75 that we've talked about several times on your show. We think that by getting back below 75, closing weekly or monthly below that, as I mentioned previously, we think crude is ultimately going to go down to $58 to $57 and do that as early as the second quarter of 2023. So that's our general outlook for crude. Any rallies, any bounces along the way, we think are likely going to be selling opportunities, just as the $81 level was that we talked about last time.